Welcome to the daily update, where I'll go over the action in the market for Friday, April 25th, and we'll see how things look for Monday, April 28th. Okay, we didn't see an awful lot of strength in Friday's session, but we didn't see a lot of selling either. And we're at the top end of this trading range that we've been in. Things are improving, and we're still getting a mixed picture, though. All of our indicators are positive, except for the ADX, the average directional movement, which is what we use to measure the trend. And so that's still getting weaker, and the red line's still above the green line. So that's negative. But the other indicators that we really hone in on are looking more positive. We continue to be positive in the short term because we're above the 20 period moving average, but we're below the 50 and 200. So in that aspect, we are still negative. All right, let's go back and talk about what happened. It was a pretty flat open because we've been at the top end of this range. You have some folks that are a bit apprehensive of doing something, and it's been a wide range, about 5,500 to the upside, 54, 5,500, and about 5,100. That's the range that we were in for the week. And folks were they're like, okay, prove it first. And that's kind of where we're at. And with the analysis that I do, we are looking better, but a lot of damage was done as we've been going down. There really isn't any substantial news to drive the market up. It looks like, okay, maybe we're just working off this extreme negative condition, but now we're starting to turn back more positive. But we have a lot of overhead resistance above where we're at, and I'll point that out as I go through the charts. So pretty much a flat open. We were more positive, then we started to drift down. We actually went a little bit negative, had a flat open, prices chopped above and below the unchanged level. Not a lot of conviction right at the open. And we were able to climb up to R1 at 55.25. So now we're back to getting above the 5,500 level. And then we declined back down to the unchanged level. Very common thing. But instead of turning negative, we were able to bounce back up and we closed just about at R1. So we were up 0.74%, but we're still below average with volume. You've got a lot of folks that are sitting back and just going, okay, I'm not really sure about this. I need to see that things are actually going to turn more positive. Now, you've been hearing some talk about FOMO, and I've been mentioning that, the fear of missing out. There's folks that are undoubtedly doing that. What they try to do is they try to get in right at the bottom, but a lot of times the bottom ends up just being a little plateau before we get set to go even lower. You have other folks that did get in thinking that we were bottoming in the past, all of a sudden to see things drop even more, and they're getting back to the break even point. It's like, just get me out of this roller coaster ride here, where now they might be actually seeing a profit, but they were seeing a loss. That changes your whole emotional makeup there. And instead of being on offense, now you're on defense, and you just want to get out at break even. And even though that's not the reason you got in, everything changes after that. And that's why I teach a whole different approach in the program that I have. But we are below average with volume. We are positive now in the short term because we're above the 20 period moving average. We're still negative in the intermediate and long term. Interest rates seem to be more under control now, not like a couple of weeks ago when they were just shooting up really fast. And we're not really seeing this flight to safety either, where they're getting out of the stock market and going into the bond market. Things have stabilized that way. We're going to get some important data in the upcoming week that will give us some clues about inflation. Earnings season is in full gear right now, and that can have an impact on individual stocks, and that can bleed over into either a sector or an actual index if it's a really big company. And all the stuff going back and forth about tariffs, but it's not really rattling the markets either positive or negative right now. There's really not much. There's really nothing definitive to this point that has actually been decided with that. There's a little bit of an escalation between Russia and Ukraine. Russia attacked Kiev, and here we're trying to work out a peace deal there. There's still all these things going on in Israel, and they may not make the headline news, but it's still happening day in and day out. All right, so mega caps, we're seeing some improvement there. Now, we haven't switched back to positive with our growth to value ratios, but they are improving. It'll really help a lot if those could switch over and be positive, but that's going to take some time to actually work out. Now, there's a debate going on Twitter. I'll show you this here in just a moment. It's called a Zwag NYSE Breadth Thrust. There's Marty Zwag. It was one of the very first stock market books I read back in the early 90s. And he was kind of a rock star. He's since passed away, but he is really well known for his analysis on the market. And in fact, there's a thing called a Zwag NYC breadth thrust. It depends on how you look at it, and it depends on where you think we crossed. But we do have a Zwag NYC breadth thrust, unless you debate that, unless you think maybe we're a day or so too late on that. But it's still a positive thing nonetheless. And I'll go through that a little bit more in a moment. We're under 25 now with the VIX, 24.84. And we're seeing some good short-term momentum, maybe a little overbought, believe it or not, in the short term, where we have our usual indicators here, short term, the StochRSI, Williams percent R, CCI 14. The 20 is not on the list yet, a little further out. The stochastics are getting kind of extreme. We're still extreme with the rate of change going back 5 days. And where we were extreme negative below the 20 period moving average, now we're getting a little far above the 20 period moving average. Intermediate term, we're just on the border with the CMB composite looking extreme positive. Now the S&P McClellan oscillator, it actually declined a little bit on Friday, but the NYSE McClellan oscillator, it's showing good momentum, but possibly getting extreme in its reading. And then the bullish percent index for the NASDAQ 100, even though all of the bullish percent indexes with the S&P, the NYSE, and NASDAQ 100, those are the three that we follow, they're all looking pretty good. But the NASDAQ 100 bullish percent index is starting to get above that upper line, which also suggests good momentum. And then the advanced decline oscillator that we have just starting to get extreme positive there, which is also suggesting good momentum. No change with the overall scenario. We'll see if something happens in the upcoming week. The Fed still is concerned about inflation going up and the employee or the economy going down. And so they're not really looking at doing anything with interest rates right now. The dollar was up after just getting hammered. It could be more of an oversold bounce right now. And interest rates are coming down. We're at 4.27%, where after Wednesday, we were at 4.31% there. And we're improving as far as sentiment. We're finally above that 25 level, coming in at 35. It's still negative, but the context is that we're going up. And so that's improving where we had been at 31. We're back to being inverted again with the 10-year to the 3-month. Now, the 10-year to the 2-year, that's doing fine. And that's what most people follow. But I also follow the 10-year to the 3-month. And so now we wait for that to go non-inverted or go back to being regular, and then we start a countdown to see if we're going to go. Now, what I mean by a countdown, it doesn't mean, 29.84 days we're going to go into a recession. It just means that we start looking a little deeper to see if there are recessionary signs that are happening. This is kind of the holdout that's staying more negative right now. It's our ADX, where we still have the red line above the green line. It's a weakening trend, so it might be getting close to switching over to a positive trend, but we're not there yet. We're below the moving average, and with the update, our bias is positive. I'm still keeping our momentum at mixed to positive because so much damage was done, and we're still kind of at the high end of this range that we've been in, and we could hit that range and start to go back down. And we need to be respectful of the negative signs that we're still seeing. We did get consumer sentiment, which actually came in better than expected. This was the final reading, and I'll have a couple of charts to show you. It came in at 52.2, where when they had the preliminary reading, it came in at 48.5. So that's a bit of an improvement there. And it's also up from the reading that we saw last time at 50.8. And then this is what's causing some concerns now. People are expecting inflation to go up. They expect it to be up in the 6.5% range, and that's causing some concern. So here is the chart where first we look at the blue line, which you can see a little bit here. That's the overall score for this particular indicator. But for the most part, we're going down. People are not as optimistic about things. things. And then how do they feel right now? That's the purple line. That's all also decreasing. A little more significant is the yellow line, which is looking out into the future. They're still feeling not so good about things. We'll see. Maybe we'll hit some kind of a double bottom here before things have a chance of improving. Here's the chart that I show, and I also plot the 2-year yield here, which for the most part has been coming down lately. That's also been going down with sentiment as well. And a lot of it's just this uncertainty. Folks don't really know how things are going to play out. Depends on who you talk to. Some people think that this is going to lead to massive inflation. Other folks think that no, it's not going to. Everything's going to be under control. Nobody really knows for sure because the economy is so complicated and there's so many variables out there that we just kind of have to take it as it comes. And anybody who's dogmatic and just says this is going to happen, okay, all right, but we'll look at the evidence and reach our own conclusions with what's actually happening. All right, then we look at the sentiment, which has been very low lately, and with the VIX composite against the S&P. And as we've been really coming down here, we've been quite negative. And we're starting to bounce up a little bit here as the VIX has actually been coming down. So we are seeing a bit of an improvement. And if you want to pause this and you can see other events that have happened here and then what happened with sentiment and different negative things and then times when things were more positive. Then US earnings are at risk from dollar weakness. Actually, I found the opposite to be true, but usually a stronger dollar, especially with companies that do international business, that tends to hurt them a little bit more because of the exchange rate. But they're a little bit worried here that because the dollar's been under a lot of pressure, that's going to actually have an impact on earnings, which is the black line here at the top. And then this just marks out since DeepSeek's arrival. Remember that? That's when China's AI came out, caught everybody off guard. It happened over a weekend. We were actually looking at some bullish positions at that point, but because of the gap lower on Monday, we had to get out at a stop loss there. And that's just how things go sometimes. And then this is Liberation Day. This was first part of April when Trump made all the announcements about the tariffs and just what's been happening, especially with the Magnificent Seven stocks. Well, they're starting to show some improvement, but they're going to have to come back and take a real leadership role in this whole upward move if we're going to be able to turn back more positive and have more of an impact on the indexes. Then the long-term trend, we've been watching this here. I have a little bit different chart. I actually go from the bottom here to the bottom here, and then I have a trend channel. We're holding up okay. But here we have Deutsche Bank's, their year-end target. Well, according to that, it's already been met here, unless that was the end of 2024. But we actually hit the high in 2025. So we're seeing some, again, you can draw lines on here to come to any conclusion you want. The chart that I have is a little bit different than this, and it's actually looking more positive because of this line right down here at the bottom. That's, I guess it would be a little bit different. I have us above the midpoint here. So you have to be careful with some of these charts. They can be, you know, manipulated to say whatever you want them to say. And then we estimate moderate selling of US equities by foreign investors across March and April. Well, other world markets have been stronger than the US and been holding up a little bit better. And so it's not a real surprise that they don't see a lot of foreign investing coming into the US market. Household net worth is a percent of disposable personal income. As we've been coming down a little bit with the market, this is coming down as well. Then here's the chart. Now, when we talk about short covering, what was it, 2.5 weeks ago when we had that just monster update? That was short covering. That's runaway prices going up. And one of the I saw this on Twitter, X, whatever you want to call it these days. They're saying, well, the Zwag NYC breadth thrust is not legitimate because it's just short covering. Well, where's your proof? Okay, now we can look at a chart here and say, okay, there's always short covering that goes on when we're going up because there's always perma bears out there that think we're going down. And then when they're proven wrong, they have to get out and that drives prices up. This is not necessarily a lot of short covering. Now, Wednesday was really more of a negative day than a positive day. because we opened higher, we hit overhead resistance, and then spent the rest of the day coming down. And we were not looking so good after Wednesday. But then Thursday and Friday are showing an improvement. We had a little bit of an upward move here on Wednesday, and then that carried through into Thursday. When you see these small little bars like this, that's not short covering. That's buying that's coming in. And then we had a choppy open here on Friday, and this is more of a sustained up move, and we hit overhead resistance, pulled back to the unchanged level, went back up to R1, came back a little bit, and then closed at R1 again. We're not seeing out of control buying. So that's my proof. Now, we don't really get figures on this until well after it happens. We have to watch the price patterns to really see how things are playing out. So somebody made a comment, but they're just going off what somebody else said. That's why in my whole approach is no, we come up with our own conclusions based on what we're seeing. We're not sheeple. We're not just going to listen to everybody else and what they say. I listen to what other people say, and that might give me a perspective that I didn't have before, but I may not reach the same conclusion. I'm not just blindly following what other people say, and that's what I try to teach in my program here. And holding on to most of those gains as we ended up closing everything down for the weekend. You can see here where we were stronger with the initial overnight session going into Friday, and then we fell back and we actually went negative there for a while, but then we were able to improve as the day went on. We're seeing a little bit of a improvement here where the blue line is slightly above the red line. And I don't know. I don't know if it's faulty data or what, but I had large cap value at 0, but it looks like they weren't able to even update the chart. I'll show you that in just a moment. But we are seeing a little bit of an improvement. We want to see this continue. We want the blue line above the red line. That means that growth is outperforming value intraday. And we are seeing a nice little bounce. Now, they both have been going up, but now we're starting to see a little bit of a separation between the two. And we're also seeing an improvement here with S&P growth of value. This is the one that I pay attention to the most. This is good, but it has to follow through. We've seen improvements before only to have everything turn and go down. We need to see this really going up to have more confidence in this. This is what I'm talking about here. It's just all grayed out with large cap value is unchanged, where growth was up 1.47%. It was down, but down less. The mid caps didn't have a very good day. And small caps didn't have all that great of a day, but we did see growth outperforming value. So we are seeing a bit of an improvement with our small cap growth to value ratio, our mid cap growth to value ratio, and an improvement here, but we're in a downtrend with our S&P growth to value ratio. We need this to get above both of these lines, continue to go up, stay above both of these lines, and eventually turn this trend back more positive. And an improvement, but just coming up to the lower end of the rainbow here with this growth to value ratio. We did see a recent death cross here when we look at the equal weight discretionary sector. So that's negative, where the staples not doing great, but holding up a little bit better. And we're just coming off of a death cross right now with the discretionary to staples ratio. That's not positive, but if we can get back above these lines, that would really help things. And then looking at the other ratios here, this is the discretionary to staples, still in an overall downtrend, but improving. Discretionary equal weight to staples equal weight, improving, but still in a downtrend. The tech to utilities ratio is improving, but still more defensive overall, as is the biotech to healthcare, and then health or hotels to utilities. So yeah, we're bouncing here, but we haven't switched back over to positive yet. We're just kind of coming up. If you were to draw some trend lines here, we could be hitting overhead resistance on those. And then some of the real bellwether areas of the U.S. economy, we're seeing semiconductors improving, but they're still in a downtrend. The same thing is true with the home builders, transportation, retail. I'll have another chart there in just a second, and the regional banks. So yeah, there's some improvement, but not really overcoming the damage that we have seen previous to this. Here is retail, where it's just kind of chopping along here when we do a ratio with the SPY, and we're still in a downtrend. and possibly coming up and hitting overhead resistance at one of these moving averages. But we are trying to cross above 50 with the RSI, which that's more positive as far as momentum. And this is the holdout right now, where we're still negative with the ADX. The red line is above the green line, but it is a weakening trend. We're also weakening in the short term, but we continue to be negative there. And you look at the pattern here, we're just kind of coming up to the lower end of this range that might provide overhead resistance here, or we could continue to go up, and that would show a lot of improvement in the charts. We're still below average with volume when we look at the oscillator, and we're continuing to be below volume, average volume here on our histogram daily number here. Really coming down with the Ulcer Index, but we're still above the moving average. Declining below 25. I should have changed that. It is under 30, but even under 25 is a little bit better. We want this to get back down at least a little bit under 20. That would make this more positive with the VIX. Also, we're declining with the VIX of the VIX. Volatility has been coming down. The momentum of the VIX continues to be down. And this is the latest reading from individual investors. They're still extreme negative. 9 weeks now. I showed this in yesterday's video. This is just another look at that same basic survey. We did decline with this fear gauge, but we were up just a little bit of a tick with this other fear gauge. So a little bit of a non-confirmation there. We are going back up, but still a lot of damage needs to be repaired here with our risk on to risk off ratio. If this continues to go up, that'll be more positive. If it starts going back down, that'll be more negative. And we are seeing an improvement with the high beta. Excuse me. Those are like Google, Apple, Amazon, Netflix, Google. Low beta is like toilet paper stocks and toothpaste stocks, more staples. Well, this has been coming back up, but we need to see more follow through from this. We really declined with the equity put call ratio. On the daily chart, we're going down with the 5-day chart, and we're also declining with the 10-day chart. We're still getting a very low reading with volatility risk premium. So in this aspect, they're not anticipating a lot of fear out for the next 30 days. This is the debate that I ran across here. This is Marty Zwag, the Zwag NYC Breadth Thrust. And we came down and we were really going down here. And we dropped below this 0.4 area. Now, what has to happen is within 10 trading days, we have to get above this red line. That's a Zwag NYC Breadth Thrust. So it's a 10-day exponential moving average of advancing stocks divided by the sum of advancing plus declining stocks. Blah, 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 blah. It generates a signal when we go below 0.4, which we did, but then we have to, okay, that's the debate. When did we go down here? When did we bottom? Where do we start counting this? And that's what some folks are having a little bit of problem with. Now we are above this 0.615 level. That's clear. But if it didn't happen within 10 days, then it's technically not a count. If it did happen within 10 days, then it is a breadth thrust signal. But nonetheless, even let's say this is not true, this is still positive. We were very negative, and now we've gone to looking quite positive. So even if this isn't valid, this is still a pretty positive development for right now. That's kind of where I come out with this. And you can see here, this is somebody on Twitter. The rare Zwag NYC Breadth Thrust triggered today. Marty Zwag discovered this. And if you can find his book, it's really worth reading. But then somebody, I didn't post it here, it says the actual definition below 0.4 on 410, that's a matter of debate right now. And then above 0.615 yesterday happened in less than 10 days. Somebody else said, well, it's just short covering and you know, blow off top, FOMO type stuff. Well, that's not what Marty Zwag developed. He's looking at a chart. He's not trying to read in what's behind the chart, which there's a place to do that. But there's also a place to just say, what is the chart telling us? But people like to nitpick sometimes about these things. This is another one too, showing that we have a thrust. So this is a little bit different way of looking at this here. All right, so we are looking better with our advanced decline line based on price and volume, even though we came down a little bit based on price. And we're still going up here, and we're above the moving average based on volume. This is where we're just on the border with our advanced decliners over the last 10 days. This works like an oscillator. Not that we're going to stop here necessarily, but when we get above this red line, that's where we just start watching this chart more closely. And this is still more negative than positive, in my opinion. We're going up with the 5-day and the 10-day, but we're not seeing new highs. It's a contraction of the new lows that is causing these moving averages to go up. We want these green lines to really explode and show more strength. That would be more internal strength. Maybe I'm getting nitpicky with that, but that's what I see based on this chart. We're positive with smart money indicator number one. We're above the moving average. We're above the midpoint here with the short and intermediate term advanced decline ratio. We're positive and going up with the smart money indicator number two, the chicken money flow. And we're positive with smart money indicator number three, the chicken oscillator. We did have a cross after Thursday with the vortex. It's still looking positive here. We're coming back above the moving average with the S&P with our advanced decline line studies. We're a little bit above, but a declining moving average with the NYSE common stock. A little bit above with the mid caps. We still have a ways to go with the small caps. And we're improving, but we ticked down a little bit with those stocks in the S&P above their 20-period moving averages. But this is still looking positive overall. We ticked down a little bit with the 50-period moving average study. The 100 and the 200 actually continues to go up here. All right, so we are still in a downtrend. The 50-period moving average is below the 200. That's the downtrend, but we're not in a bear market. We're just in a long-term downtrend right now that's seeing if it can recoup right now. And we are below average with volume. Tick down a little bit with the 20. We're about flat with the 50, and we're flat with the 200-day moving average on the S&P. This is showing good short-term momentum because this can last for quite a while. The StochRSI is extreme positive. Now we have the Williams percent R being extreme positive. We are extreme positive with the CCI 14, just barely. We haven't quite come up to that level with the CCI 20. And now we're looking extreme with the short-term stochastics and the intermediate short-term stochastic. We're turning back to positive above the midpoint with the long short-term stochastic. Force index is positive. We're looking better with the condition of the short-term trend. We're above both lines, and the lines are starting to go back up. And we're above the simple and exponential moving averages. That's why we've switched back to positive in the short term. We're still looking rather extreme here with the rate of change going back 5 periods. We've seen some just monster moves lately. We're above the midpoint and going up further into the +1 channel with our standard deviations chart. And here's a little bit of a tick up with inflation at 1.51%, much different than we're going to be getting CPI. Are we getting CPI? No, we won't get CPI this week. We're going to get core PCE this week, and the employment report will be coming out. We're positive now with the balance of power. We crossed above the midpoint. And this is going down because we're at 10.07% from the all-time high set in February. That's on a closing basis. And so we're still in correction territory. If this continues to go down because the S&P is going up, now we're just going to be, we'll drop under that 10% level and be in just a pullback mode. So that's just the basic definition, because there are people that they change things. If we go down over 10%, they modify how they manage things. If we go down over 20%, that's the definition of a bear market, and they change even more things at that point. Well, we're kind of hanging on to the 10% level right now. We are seeing a little bit of an improvement here with the bow tie. We're getting above the moving averages here. This is the 30-period exponential moving averages. And now the short one, the 10-period simple moving average, is starting to turn up. Now, this is still negative. We need to see, like over here, we need this neon green to be on top. The red can be in the middle, and then the blue on the bottom. We're still seeing a reverse of that in the shorter term. And we're just barely above this black line here with the CMB composite index. We're still more neutral but negative with the go, no go, with the lighter shade of purple. We're crossing further above the midpoint with the highest high, lowest low value chart. We're turning positive with the TTM squeeze. We're actually going above the midpoint there. And we tick back up a little bit with standard deviation. We're still above the moving average. This is a change. The ease of movement has now gone positive. We crossed above zero. And coming down a little bit after being extreme with the S&P McClellan oscillator, but it's still positive. So when that's above zero, we're going up with the summation index based on price and volume. Coming down, but still extreme with the NYSE McClellan oscillator. So there wasn't an awful lot of strength. Even though we closed up on the day, we saw some internal selling going on that was picked up by some of our other charts. We're still going up with the summation index for the NYSE based on price and volume. And the Arun's flatlining. It's not really picking up much of anything. We're still going up, slowing down though a little bit with the Swanland trading oscillator based on price, but we are continuing to advance based on volume. And we're positive now with the PMO. It's above its moving average and just coming off of this really extreme reading, crossing above the midpoint based on price, positive but still below the midpoint based on volume, and coming back down after being extreme with the PMOs that are rising. A little bit of weakness internally, but we're still going up with the buy signals and we're leveling off after we had been advancing with the PMOs that are above zero. We're positive with the Elder's Impulse system for the S&P, and we're positive with the parabolic SAR since the dots are underneath. And we're coming back up to this red line. The short-term oscillator is positive and above its moving average. The MACD, more short to somewhat intermediate term, that is now positive after being extreme negative. So across the board now, short term, intermediate term, and long term, the momentum is now positive. And we're positive with the Copic curve and starting to get close to the midpoint here. We're flat though with the Sean trend meter, but after being extreme negative, we have been improving lately. We're above 50 with the money flow. We're above 50 with the ultimate oscillator. We're above the moving average with on balance volume. We're getting above 50 with the RSI 14 and a little bit further above 50 with the RSI 9. So you can see there's some momentum improvement going on here. We're finally starting to turn up a little bit with our intermediate term trend based on 50 periods. The blue line and the red line are starting to turn up. If we can keep going up, this will continue to improve. And we're above the 20 period moving averages, but we still have the 50, 100s, and 200s left to go. And if we keep going up, we might hit these as overhead resistance. And we're already extreme when we measure how far away are we from the 20 period moving average. We're not extreme, but looking better with the 50 period moving average. And we're starting to come back up to the midpoint with the 200 period moving average here. And the bullish percent index for the S&P continues to go up. That's positive. We're going up, but still below 50 with the NYSE bullish percent index. And we're just over the border a little bit with the NASDAQ 100 bullish percent index, starting to look a little extreme there. Wondering if this is going to generate a signal. I pretty much have crossed off this first signal. We'll see. If we cross down below this red dashed line, that'll be the three criteria. We go above the blue line, below the blue line, then below the red dashed line. And we've been going up to cause this signal. Does that mean there's going to be a reversal there? But now we're looking at a Pring bottom Fisher buy signal. This was negative. It crossed above the red line here, and that could end up being positive. We're doing okay in our longer term chart here. We're above the S1 level, but we're still below the P level here. But we were up 4.5% with the S&P on the week. And we're positive here with the Heiken Ashi. We're turning back and looking more positive with the Kegi chart. The Renko chart's looking more positive, and the three-line break is positive. So our trending charts are starting to pick up that now we're looking more positive. And we had just enough of an upward move to draw in a new X. We have a triple top breakout, which was generated in Friday's session. Because you can see it looks like a box right here. Actually, looks like a big P. This was the down move, up move. But a lot of the boxes, most of the range that we've been in here, we're finally possibly trying to break out of that. Long term, we're still one notch off of being on a full buy signal with the Zohorchak method. And we're improving with our 150 and 200 period moving averages, getting further above these green lines. And positive across the board with the S&P mid caps, small caps, and NASDAQ 100 still negative in the intermediate term, still negative in the long term with the mid caps and small caps, and turning back to positive in the short term with bonds based on price. And commodities have been under pressure, and the dollar continues to be under pressure on all time frames there. And this is encouraging too. The big growth areas, discretionary, tech, communication. Those were the leaders. Now we did see a bit of a bounce from healthcare, but these outperforming, we need to see that day after day after day, not just 1 or 2 days in a row. And a little bit negative with the Dow having, I think an earnings report came out or something that took the Dow down with a lower open, but then it recovered after that. We had a BPI cross with the tech sector above 80. Okay, that's just showing good solid momentum, but we're still negative on a trending basis with the tech sector. Then you had the Nasdaq crossing above 17.2, 17.3, and 17.4, and the S&P getting above 5,500. We're still in a downtrend with the Dow, but we're positive with the Elder's Impulse system with the diamonds. Still in a downtrend with the Nasdaq, but a nice little upward move here. So we are seeing some improvement, and we're positive with the Elder's Impulse system for the Nasdaq. Also, a nice little move up with the Nasdaq 100, but we're still in a downtrend longer term. But we're positive with the Qs when looking at the Elder's Impulse system. The momentum for the Nasdaq 100 is positive. We're improving a little bit here, but we were actually down a little bit with the small caps. They were virtually unchanged on the day. And also up just a little bit here with the Russell 2000 small caps, but still positive with the Elder's Impulse system. And we were down a little bit with the mid caps. It was more of a large cap growth day on Friday. And still positive with the mid caps looking at the Elder's Impulse system. The Wilshire was up 0.68%, but still working off of a downtrend now. Same thing with the total US stock ETF. It was up 0.69%, but it needs to get back above these moving averages to have things look better. We are coming down with the staples to tech ratio. Staples defensive, tech is growth. When this ratio is going down, that's more positive, but overall, the ratio is in an uptrend, which shows that staples are outperforming tech longer term. Financial sector, it was actually down 0.5%. We're still underneath the 50-day moving average, and we're right at this, the FANG index. I'm getting, we're just barely negative here. We're seeing a death cross here. This is Facebook, Apple, Amazon, Netflix, Google, Nvidia. But now we're starting to break above the lines. If these big stocks can take more of a leadership role, this can keep going up. We would negate this death cross here, and that would help the other indexes as well. And see, Apple was up 0.44%, still in a downtrend. Amazon in a downtrend, up 1.31%. Google downtrend, up 1.68%. Meta was up 2.65%, and it's holding up a little bit better with its trend. Microsoft is in a downtrend, up over 1%, and was able to get back above its 50-day moving average. Nvidia up 4.3%, but not even up to its 50-day moving average. And Tesla, it climbed back above its 50-day moving average. It was up 9.8%. So we'll see if we can get any more follow through there. And we have Netflix setting another new all-time high. This is about out of all the really big stocks, this is still the best looking chart. And seeing a bit of an improvement here, but we're pretty much neutral when we look at the correlation between US and world stocks, flattening out a little bit here with the longer term correlation. We did go up. We're into more the mid 60s now with oil. We're still in a downtrend with the dollar, even though it was up slightly. We still have yet to get back above 100. And coming down with the 10-year yield, and this was the big upward move. This is when things were going crazy. This is when we were coming down. This was the flight to safety. Well, things seem to have stabilized a little bit in here and going down, and that's more positive for stocks. We are going up here with the 10-year based on price. We're back to being inverted again with the 10 to 3-month yield curve. And we are seeing some improvement with our growth to value ratios. The Qs to S&P, discretionary to S&P. Large cap growth is coming above the moving average when compared to large cap value. So large caps, mid caps, and small caps, we're seeing across the board improvement. Can it continue? Will we see some follow through here? And we're coming down here with the staples to S&P ratio. Now the other ratio was staples to tech. This is staples to the S&P, the index itself. If this can continue to fall, that would be much more positive for the S&P. So what's our outlook for Monday? We are positive in the short term. We're still negative in the intermediate and long term. We don't have any economic reports coming out on Monday. And then whatever blows over the weekend. whether it has to do with the war with Russia, Ukraine, something in Israel, or if it's more tariff announcements or trade war news that's coming out, that can always have an impact. Here is a look at the economic reports coming out. Not much major until we get to Wednesday. That's when we start getting the employment cost index. We're going to get another read on GDP. And then here's the big one, personal income and spending, the core PCE. That'll be an inflation reading that we'll get. Then we'll get initial jobless claims on Thursday and ISM, another big one, the manufacturing. That'll come out on Thursday. And then the big employment report's going to come out on Friday. So this past week was kind of light as far as economic reports. This is pretty heavy, what we have coming up here. And this is just a look at the calendar for the upcoming week. Seasonality, we're positive with the Dow, where we're neutral to positive with the S&P and NASDAQ for April 28th. And if you go with the dashed line here, which is the post-election year, we do have positive seasonality going into the end of April. So we're still looking negative, though, with our long-term growth to value ratio for the S&P. Discretionary to staples, that just switched over to a death cross just recently. But both of these are improving, but we need to see more than what we've seen. And our moving average studies are improving for the most part, but they're still negative. And our long-term special K chart, I'll show that over the weekend in the deep dive video. So that's still negative. Now, we're still looking more positive here with our three smart money indicators. The S&P and NYC McClellan oscillators and summation indexes are positive. The bullish percent indexes are positive. The swell trading oscillator, parabolic SAR, momentum is now turning back over positive. Ease of movement, that's a new addition here. The money flow, ultimate oscillator, and vortex are all positive now. The financial sector, we'd like to see it doing better, but it's doing okay right now. And the momentum for the NASDAQ 100 is positive. And then we have this mass index reversal signal. And then a new addition is the Pring bottom Fisher buy signal. We don't know about the mass index. It's reversing, but it hasn't triggered yet. So we're not quite sure what that will be. Okay, so our conclusion, we're still positive in the short term, negative in the intermediate term. And when we look at the positive time frame, we are improving. Are we starting a break up? Yeah, breaking up is hard to do. It should be a break up above the recent range here. Are we going to be able to sustain this, or have we topped out for at least short term? We are still negative in the intermediate term, but improving, and we are still negative in the long term and working off of that recent death cross. Thank you. I hope you found this helpful. I hope you have a great weekend, and I will talk to you in the next video.